Hello, friends, and welcome to episode number 3 of Pulling the Trigger on a Stock, brought to you by AIS LLC. So, we're going to talk about what it means to actually invest in a stock. So, to begin, investing in a stock basically wants your time and effort, well, not really so much your effort, but in faith that the company will actually be successful, and in return, your ownership of the company will actually be worth more over time. So as a benefit to you as an investor, um, you know, investing in a stock means that you have the time to grow with the company. You really are just helping out a friend, or in this instance, a company with a project. The project that your friend decides to take on is Netflix. Netflix, of course, is a streaming service that has been pretty dominant for the last few years, and the business model is pretty simple. The more people watch, the more subscribers you have on hand, the more content you bring in, the more creative content that you make to bring people in will also help you grow the company. So, you know, Netflix is a pretty simple. It's a pretty simple business. So why not? So you begin to do some research. Where do you get this research from? You get them from financial news, more specifically their financial statements, and also by reading news and keeping track of their metrics. Now, we are in our research here, we found out that Netflix grows by adding more members, expanding to more markets, adding content that people just want to watch. And knowing those things, it made sense to me. I mean, of course, there are those risks where there's other competition coming in. Contents become more expensive. But at the end of the day, Netflix is a part of popular name. So, you know what? I don't see too much risk. So I'm gonna go ahead and make an investment here. My first investment in Netflix was actually back in 2014, where I purchased one stock at $384. And then eventually down the line, I went ahead and added 3 more shares in 2015, bringing me a grand total of 10 shares. And at its height, the investment grew to about $2,600. So every year, how you can check in with Netflix to see how it's doing is by reading the financials. You can certainly read news to summarize what happened in the quarter or even the year, but when it really comes down to it, is you're going to be looking at the numbers. So we're going to talk about some finance terms here that would be pretty helpful just to know, just in general. The first thing we're going to talk about is the income statement. Is basically a sheet that summarizes all of the sales that the company had made and also other expenses affecting their bottom line. Net income, of course, is the bottom line. Basically the money left over after all the sale expenses. Your balance sheets, this is where you have your assets and liabilities, debts, production costs, licensing costs, things of that nature, and cash flow. The cash flow is a statement that tells you if there was anything in addition to the net income that adds to your overall income. So having a positive cash flow every year is actually a good thing. And lastly, we're going to talk about the membership numbers. We're going to talk about domestic and international paid members. So next thing we're going to talk about here is the good, the bad, and the ugly. We're going to be covering years 2014 through 2019 and also the latest quarter. So we're going to talk about the Netflix performance, the stock performance, and also what my investment was at the end of the year. We're going to talk a little bit about the numbers, and we're also going to check in with Netflix. Alright, so we're going to talk about Netflix stock performance between 2014 to 2015. My current investment is actually worth $331. It actually did lose a little bit of money, But let me talk to you about where Netflix is actually at this point. So for the last 4 years, Netflix has actually been investing a lot in their global infrastructure, and of course that just meant bringing along more debt and also more growth opportunities. So I'm actually a little bit kind of surprised, but I'm sure there are those concerns that of rapid expansion of expenses. But you know what? I'm all for Netflix. I know that they're going to make this up and more. So in 2014, what happened that was good for Netflix, that they actually had a gross revenue ending in 5.5 billion. They had a net income of 267 million. They had a positive cash flow of 40% of 509 million. They had positive subscriber worth, and as of December 31st of 2014, they are a total of 55.9 million subscribers. 18.2 million is global, and 37.7 is domestic. And they also were able to add 6 new territories, which now makes them stand in 15 new markets. Now, 2014, the bad, the ugly, and the future. The bad, because of this rapid expansion, come with added expenses. The ugly, 40% increase in liabilities, financing for increased expenses, licensing, international expansion, and original content production, and also increased marketing expenses. So, this is a time where, Netflix is also, putting out a lot of commercials, not only locally, domestically, but internationally, and they're also spending money to get foreign content as well. What Netflix is looking forward to for next year is more subscribers, more content, and increased global expansion. Stock performance from 2015 to 2016. The investment is actually now worth $1,143. Quite a big jump actually from the beginning or the ending of 2014, beginning 2015 to 2016, and this actually was a pretty significant year for Netflix, because in July of 2015 they did a 7-to-1 split. The stock that actually held that one share at 382 actually grew to $700 this year, but then it was split down to 7. And because of that, a little bit later, I decided to add, 3 more shares at $107. Totaling my whole investment to just $714. So in 2015, Netflix, the good. So the good, again, record-setting sales of 6.7 billion, increase of 30% over year. Net income of 2.2 billion, 11 times from 2014. I purchased 3 shares at 107 at September 17, and also they've had a really good year in increased membership numbers. At the end, they had over 74.7 million subscribers. The global subscribers number is actually 30 million, 37% increase year over year. Domestic subscribers is very strong, 44.7 million. And again, they did do the stock split in July of 2015. The bad, the ugly, and the future. The bad, they've only had a very limited expansion of only 3 new markets. Increased license costs. This is also where Disney stuff actually started to show in. So they come in, they spend a lot more. And in 2015, this is one of the only years that they've actually had negative cash flow of 342 million. It's probably because of a lot of different expenses that they had because of the continued global expansion. The ugly, of course, Netflix just keeps issuing more debt. Liabilities is at 13.5 billion, a 35% increase from last year. And this is because of increased operations and content costs as well as marketing. You gotta get those commercials out there. You gotta, bring people in. They are really, really working hard. The future for Netflix is, of course, they're gonna follow the same story: more subscribers, more content, more markets, and more exclusive content. Now, for Netflix on 2016 to 2017 stock performance, the Current value of my investment is currently at 1657 and 37 cents. You know, still went up for the year, but it had a pretty dip here for most of the year, but it recovered pretty well. It opened at 110. The highest point was 129. It closed at 127.49, and you know, overall, the stock performance is still pretty good. It's still holding on. It's still, you know, growing. So Netflix 2016, the good. They have record-setting revenues of 8.8 billion and 32% increase from 2016. Strong net income of 2.8 billion. They also increased the price of premium from $11.99 to $13.99. They also had a solid growth in domestic and global subscribers, and they are now streaming in 130 international territories. The bad was that there was a substantial increase in liabilities. They've also had a negative cash flow of 342 million this year. And the ugly, of course, increased content costs. Netflix is having to make more and more licensing for the stuff that people want to watch. Unfortunately, the mouse, or as I like to call Disney, is not cheap, but you know, it also brings people in. 40% increase in liabilities, now standing at 19 billion. This is a lot done through debt. Majority of content that is watched is actually from outside vendors, such as A&E, different networks other than Netflix, and increased costs due to expansions. At this time, Netflix is already in 130 territories, so they are growing pretty fast. Of course, looking forward, Netflix is looking for more paid customers, more original content, and of course, always expanding to new territories. Now, from 2017 to 2018, this is actually one of those few years that the stock took off. At the end of 2017, December 31st, my investment was now actually worth over $2,600. The stock started opened at 129. I had a high of 206, low of 144, and a close of 206. So again, the investment is still growing in spite of those risks, and with this, you know, it goes to prove that over time your investment can certainly grow. So for 2017, Netflix the good. Again, Netflix is still doing great. They are having record sales of 11.7 billion, 34% year-over-year increase. Net income of 4.1 billion, massive increase from last year. Positive cash flow of 1.3 billion. This is also because it had price increases in standard and premium plans. The original content is actually sweeping the Emmys. Original content is now getting awards. Major focus in original content, and at this time they've actually achieved a total of 110.6 million paying subscribers. They had an overall increase of 25%, substantial growth in international numbers, and are now streaming in closer to 200 territories. 2017, the bad, ugly, in the future. The bad, Netflix is issuing a lot of debt to pay for content and the original content. Increased overall liabilities, already at 19 billion. Increased content cost, no new shares issued, and a lot of this debt that they are actually issuing will actually be due in the next 5 to 7 years, and this is like a ton of money. So looking forward, you know, streaming wars are seeing that you know, they're gaining steam. Other players are trying to step up. You know, they want to be where Netflix is at. There's other content providers, you know, like Amazon Prime, Hulu, HBO Now, and possible content pullback from Netflix. Now, looking at 2018 to 2019, this is again another year that the stock did relatively well. it had a pretty good run, with the highest point being $423. The stock opened at 201.65 and it closed at 315.34. So a little bit off the high, but still on a positive note. This is where a lot of value was actually gained because of the performance that, as you're going to see in the next slide here. So 2018 was actually a very good year for Netflix. They had record sales of 15.7 billion. They had a net income of almost $6 billion. That's actually pretty good. They had a cash flow of 999 million, almost $1 billion, and they also had very good subscriber growth. At this point in time, I've actually sold some of my shares here to open myself up to more opportunities, and I actually sold several of my shares at 276, returning me a grand total of almost $2,000. I didn't completely sell out. I just have 3 shares remaining. So at this point in time, the total paying members were actually at 139.2 million. Very strong global growth from 57.8 million subscribers to 80.7, and very modest growth in domestic markets. So in 2018, the bad, the ugly, and the future. So the bad, liabilities are out of control. The cost of production and licensing are getting more and more expensive. The ugly, liabilities standing at $25.9 billion. Other companies are seriously thinking about launching their own streaming service, and Netflix is still issuing a lot of debt, but their growth still continues. Looking forward, the streaming wars is gathering steam. They want to keep subscriber growth growing, and of course, more expansion. So now we're going to look at 2019 to current. From today, not today, January 1st, 2019 to July 17th, about 10 days ago, the stock has kind of been relatively flat with a pretty big dip at the end of the year here, but recently did take a dive because of something that happened in the most recent quarter. So at this point in time here, where can you actually see Netflix? As you can see in the globe here, there is actually a lot of coverage that you can tell that Netflix is able to reach. So you can see that Netflix is actually a pretty big global player. So for the first 2 quarters of 2019, we're going to talk about the good. So in total, for the first 2 quarters, revenues coming in at 9.4 billion for the first half. So it is almost in line with what they have been able to provide consistently. Net income is steadily increasing for the last 2 quarters. The only difference is that net income in quarter 2 is coming in at 25% less. They do have a positive cash flow, however, of $5 billion for the second quarter. Steady membership growth, overall positive for the first half of 2019. The bad. So the bad, this particular quarter wasn't a very good one for Netflix. They've actually been pretty steady. However, this is actually the first time they've had a decline in the domestic market, and also a substantial decline in subscriptions abroad. Also, there's other customers that are pretty size sensitive. They're maybe thinking, maybe Netflix is a little expensive. Their liabilities and debt just keep getting higher and higher. They're at 30 billion right now, and their ads came less than expected. What they're facing right now is increased competition from Disney, using more debt for content. More streaming is from licensed content, and membership declined due to not a lot of new material, and also because of price sensitivity. So according to the CEO, they're saying that this is just a bleep, in the story of Netflix. They're hoping that membership will increase with Stranger Things season number 3, and they're estimating for Netflix to go back to normal growth mode in the next quarter. So what's next? Netflix is still the leader of streaming. Everybody wants to be like them. Of course, the stock, suffered a pretty good loss, in the last week or so. However, knowing this information, do you buy, sell, or hold? Thanks for watching episode 3, guys. Let me know in the comments if this is something you would buy some more, sell, liquidate, or see how low can it go, or just jump in right now. All right, guys, take care, and see you on the next episode, number 4.